Hello and welcome to a brand new episode of ET Market Wrap, where we discuss all about markets every Friday, right here on ET Markets live stream. I'm Neha V Mahajan, and like every week, we have Mr. KRANTHI Bathini, equity strategist at WealthMills Securities, with us. Thank you so much for joining us today on ET Markets, KRANTHI sir.
Thank you, Neha. Thanks for inviting me on your show, and a very happy New Year since we're doing uh, the first show in the calendar year in the month of Jan, first week
Yeah.
of Jan.
Thank you, and I wish the same to you and everyone in the audience as well. So, let's kickstart our session for today. This week was kind of mixed for the markets. The first trading day went quite great with Nifty and Sensex touching new highs, but then for two straight days, we saw that the markets ended in the red. What is your outlook on the current scenario for this week?
Yeah, Neha, we still have the positive stance because the liquidity gush in this market is making the market to sustain at this higher note. Uh, Normally, what we can expect is during the last week of December and first week of the uh, Jan, what happens is we can see some kind of subdued volumes in the market, but this time is completely exceptional. We can see strong participation coming from foreign portfolio investors, even the domestic retail investors. It's quite strong. Okay, even though throughout the world it is a holiday time, but in India the markets have been running quite strong and firm. So the base formation is quite strong at this point of time, Neha. Even though the headline indices are seems to be in a consolidation zone at this point of time, but in the bottom range, okay, whenever the markets drift down, we can see some kind of buying interest is emerging in the headline indices, and the most of the activity is there in the mid and small cap space. It is by and large stock specific. The new themes are emerging right now. The defense theme is always we have been discussing. It is quite strong. It's going up, and and we can see some kind of bottom fishing in this market at this point of time. So stocks with decent valuations, stocks with decent business models, uh, and the stocks were in a quite a long time consolidation zone. Those stocks also emerging as the front runners at this point of time. We can see some kind of momentum is getting built up in certain pockets of the market. So overall, nothing to worry at this point of time. The base formation is quite strong in the market. Markets are not getting tired. Okay, even though despite of 21,000 levels, 21,600 levels, we have not seen the markets getting tired at this point of time. We can see gush of liquidity. As I just want to mention, the key drivers for the market in the medium to short term are liquidity, valuations, and sentiment. These three parameters are important key drivers, and these key drivers are strong at this point of time.
All right. So let's move towards the next segment of our session, which is stocks in news, where I pick a few stocks that are trending. So the first stock I've picked up is NHPC. So what is happening with NHPC right now? Today, the stock went up around 6% intraday also. What is the outlook on the stock?
Yeah, the National Hydro Power Corporation (NHPC). Okay, the stock, if you see, Neha, the stock was in a long consolidation phase. Somewhere the stock spent years and years in the range of 15 to 20 rupees for more than a decade. What we can see is right now, the as we regularly discuss about the power sector, the power sector is coming back into the front runner at this point of time, and we can see a lot of demand for the power, and also whatever be the capexes they have done in the earlier capex cycle, they have started paying fruits for this company at this point of time. And also these hydropower companies are they're diversifying their business models right now, like the NTPCs of the world and the other companies. They are getting into the green power, which is by and large the solar power, and they are changing the blend of the business model. One thing is the stock valuations looks attractive at this point of time. The sector is turning positive, and also the diversification. Okay, it will take time. Okay, to get the fruits from these capex, what they're doing in solar and all. but it's a positive move. This company, due to the relative valuations of these companies, looks attractive. We can see some kind of momentum that's building out stocks like NHPC. So investors who are holding, they can hold on to the stock for a medium to longer term perspective.
Okay. So the next stock I have picked is Alok Industries. The stock has actually rallied up to 51% ever since Reliance Industries put in money into the company. So how is the general outlook for the share?
Yeah, last 3 years, Neha, Alok Industries was testing the patience of the investors. Uh, the stock
Hmm.
was in the range of 15 to 20 rupees for more than 3 years. Okay, and of course, Alok Industries has been acquired by Reliance Industries long back, 4 5 years back. Okay, in the
Hmm.
through the NCLT, and they are the, it is we can say it is the holding company is Reliance Industries. Right now, this news, this infusion of capital by Reliance Industries is due from quite a long time. Right now, uh, the company has been consistently making losses. Right now, Reliance Industries has infused 3,300 crores as the preferential issue. They are infusing the money, which created the
Hmm.
positive vibes for this company. We need to see how this rally is going to sustain, because earlier the stock, 4 years back, the stock rallied from a range of 5 rupees to 60 rupees around, and the stock has came down to the range of 10 rupees also, and it was
Hmm.
consolidation from 15 to 20 rupees in the past few years. Right now,
Yeah.
you can see, we can see a clear breakout at this point of time, but this stock is suitable for the only the high risk appetite and also very long term investors. But those who want to trade in the medium to short term, strictly they need to
Hmm.
have a stop loss with respect to this company is concerned. Probably they can keep a stop loss around 28 to 27 rupees as the stop loss for this stock.
All right. So the next stock I'm going to talk about is Nestle. So Nestle, as we know, that has split its stock today, and the stock is actually was now I can say was number sixth when it comes to the most highly priced stocks in India, and it was around 26,000 till yesterday. But after today's 1:10 split, the stock is around 2,600. Now, the stock went down 2% intraday. So, what would you suggest to investors who are looking to make fresh entries or who are holding the stock currently?
First thing, Neha, the investors need to inculcate and develop a habit. Okay, don't look at the price, look at the value in the company. Of course, it's a
Hmm.
very difficult task to find value, because everybody knows the price. Okay, one thing is evident, and one thing is tangible in the market is the price. Okay, but value is the thing that is hidden, that is intangible. So, as you mentioned, the price of Nestle, okay, one of the highly priced stock in terms of the sixth in a row, you as you mentioned. Right now, the stock has given a split, okay, which makes the retail investors to affordable. I can say it's just a change, sentimental change, okay, and people with a lesser money also they can buy a quality stock. With the split, it will not, the value in the company is not changed, the value remains the same. What happened is, okay, the stock has splitted. Right now, what we can see is, we can see some kind of retail buying interest that can come to Nestle.
Hmm.
The fundamentals remains the same. Right now, their business model is quite strong at this point of time. The dairy business and the other FMCG businesses they are into, they are doing extremely
Hmm.
good in Nestle. We can't see right now Nestle is just a Maggie business. They have a very diversified business model at this point of time. So
Yeah.
existing investors they can still hold on. Probably they can see more number of shares in their account. The investors who want to enter into this company, definitely it's a company to buy at a very staggered manner for a medium to long term perspective, probably nobody in a shorter term we can't expect any fireworks in this company, but on a medium to longer term perspective, definitely it's a company to hold. And also what we can expect during the 2024 is we can see the rural consumption story to emerge, and FMCG stocks probably they can do well, and also the consumer centric stocks also they are positioned to do well during this year. So buy on dips, that's the strategy one can have with respect to Nestle is concerned.
Okay, okay. So the next stock is Century Textiles. This stock has rallied up to 20% in the last two sessions. So, what is the outlook on Century Textiles?
Yeah. Normally, investors who listen the company name Century Textile, they think that the key driver for for this company is the textile business. But
Textile,
the
yeah.
most important portion in this company is it is major key driver for the price movement in the stock is their the land bank story they have, and the reality story, the real estate story emerged in this company. They have pockets of land. They have been monetizing this land. They have been developing the real estate properties, both commercial as well as residential in these land pockets. That is the reason the stock has been rallied. If you see last 2 years chart, the stock is one of the multiplier. So yesterday, what we witnessed is there is a sudden surge in the real estate companies, especially those who are focused in the metros, and
Hmm.
even the Mumbai-based reality companies also. They have been rallying because of the pre-booking orders, and the reality space has been doing good at this point of time. The numbers posted by most of the reality companies are quite strong at this point of time. So in anticipation of the strong numbers from these reality stocks, reality companies, the stocks has been rallying at this point of time now. So existing investors can hold on, but investors with high
Okay.
risk appetite only one can buy at these levels.
All right. So the last stock for today is HL. HL recently joined 2 lakh crore club. So I want to understand what is the outlook on the stock in the short to medium term and medium to long term.
Neha, if you remember, we have been this is the stock we have been discussing in the defense theme, and also in the
Hmm.
aerospace theme is concerned. Uh, as we pursue, defense is one of the key sunrise industry at this point of time in India, because of the Atmanirbhar Bharat, and also the defense theme is emerging as one of the key manufacturing and export oriented hub. India is emerging as right now. Many of the companies which are in the manufacturing and engineering, they are diversifying their business models to get into defense space to take the advantage in the order book visibility and earning visibility, and given the kind of domestic focus India is looking forward right now. So in the aviation space and the defense space, one of the key beneficiary in India is Hindustan Aeronautics. The stock, if you look at the chart, the way the stock has created phenomenal wealth to the investors. The stock just within a span of 6 months, the stock rallied from 1800 to now to the range of 3000. In fact, the stock had a split also in between.
Hmm.
So the price has splitted. So that is the reason we can see the 3000 rupees level price at this point of time. Neha, 1 lakh crores turned into 2 lakh crores. That means the stock has created within a short span of time 1 lakh crores of value for the investors. What does it mean? If you take a mid and small cap company, 10,000 crores is the market cap, most predominantly the typical size of a mid and small cap company. The company has created 10 mid cap, small cap companies for the investors. So that is the strong defense theme that's emerging in India. So existing investors definitely they can hold on to the company, but one can add this company as a systematic manner. Okay, probably one can do a stock SIP in this stock. They can keep adding this stock given the kind of order book visibility and the earning visibility the company have. One can add this stock in their portfolio.
All right. So before we move ahead, I just wanted to talk a little bit more about, as you mentioned, about sunrise sectors. I just wanted to get an idea, apart from defense, are there any other sectors you would like to add that are sunrise sectors in India right now?
Yeah, the EV space is emerging as a key theme, Neha, and and there are very limited number of players. There are both in two wheeler, four wheeler, and also the trucks. This is the new theme is that is placing the new theme. So one can investors.
Mm.
We have Ola Electric that also filed uh, the red herring prospectus with SEBI. Okay, that company also going to come. So we have plenty of these new names that are emerging in the two-wheeler EV space and four-wheeler EV space. So this is one theme. One can
Mm.
keep it on their radar, and the companies related to this whole theme are definitely going to gain momentum over a period of time. So one need to keep this theme also on their radar as a new sunrise sector in India.
All right. And do you think hydrogen, any industry that are connected to hydrogen fuel creation are also a part of sunrise sectors right now,
Yeah.
or it needs some
Neha,
time?
just to your point is absolutely correct. You're perfect on that. But coming the theme, the green energy theme. Okay, all these are all the subset of the green energy theme, the hydrogen and the other alternative fuel, and the green energy and EV. This is the theme overall. It is one of the
Overall,
interesting
okay. It's a
theme to,
broader theme.
yeah, it is. We one need to keep on their radar. So there are plenty of opportunities, as you mentioned. Green hydrogen right now, if the green hydrogen is concerned, very few players, the large Reliance and Adani, so these are the people right now they are venturing into that. We need to wait and watch how the entire episode is going to develop over a period of time.
I think we have some kind of delay. Yeah. So sorry, I think we had some network issue. So I think I'll just move to the next question. So I just wanted to discuss with you about this report that Nomura has released recently, and it has given a target, Nifty target for 2024, and they have said that by the end of 2024, Nifty will be around 24,260. That's a very particular number, very specific number they have given. And Nomura has suggested buyers to use short term corrections as buying opportunities. And it is overweight on financials, banks, healthcare, consumer staples, infra, power, and oil and gas, along with telecom also. So, anything you would like to add to it? What do you think about this report and the number they have given?
Yeah, I completely agree with their point. Indian market is definitely buy and dips, but I don't want to discuss about the headline number, what they given as a target, Neha, because in the earlier years, whenever these kind of big research houses, firms, global fund houses, when the JP Morgan used to come up with the Sensex and Nifty target earlier years, now they stopped giving because
Hmm.
whenever they give the target for 1 year, the target is getting achieved within a span of 2-3 months time. So they stopped giving that number right now. They're talking about the broader the rally and the opportunity in Indian markets is concerned. So definitely, I completely agree with their report. Uh, the banking sector has to, financial services sector has to rally the bandwagon. This rally, what we are witnessing, we have also big event this year, the election year, and also the Fed. A lot of job has to do the Fed, and also by the end of the year we are getting into US election. So all these factors
Hmm.
are going to play key roles, and the geopolitical issues, these are matters a lot. So, but the key theme in India is definitely it's a buy and dips market. So investors never miss an opportunity in India if the global forces or any other unforeseeable forces make the market to get into a corrective mode. But that's going to be a wonderful opportunities for the investors who are believers of India's theme, and also who want to participate in the India's growth story.
All right. So, the last thing I want to discuss before we move to the questions from the audience and conclude our session for today is what levels to watch out for next week, and what is the general outlook for next week.
Neha, the market can be a range bound at this point of time. Probably we can see on a weekly basis Nifty in the range of 150 points. Nifty we can see, but 21,500 is the sentimental level. One need to keep their radar. Okay, as long as the market stays above this range, we can see a positive outlook with respect to the markets are concerned. But we do expect like the same week we expected the market to be in a consolidation phase. There is a tug of war between the bulls and the bears. Whenever market is trying to give up, whenever it comes to the negative zone, we can see a strong buying interest is emerging in this market. So it's a typical strong strength of a bull market and the liquidity in the market. So we can expect the same kind of momentum to continue at this point of time. We have some kind of US job data. One need to look into that because it have the implications on the decisions, key decisions taken by the Federal Reserve in the coming months. So these are the data sets one need to watch, keep on their radar.
All right. So now we're done with the session. So I'm going to pick a few questions from the audience. The first one is from Gaurav. He's asking about Vedanta fresh entry and long-term view.
See, if the long-term view is concerned, even though despite of the strong fundamentals and the business model they have, the lingering impact for this company is the debt on their balance sheet. So how the company is going to manage the debt on their balance sheet, and also the corporate governance that do come as a question for this company. So these are the two things one need to keep in mind to take any serious investment decisions for a longer term. Most probably for the shorter term, because the kind of dividend yield the company gives, okay, one can buy the stock in a medium to shorter term perspective. So one need to have a strict stop loss also when they're coming into a shorter term play. Definitely for the long term play is concerned, we need to wait and watch how they are going to address their debt on a longer term basis.
All right. Another query we have from Rajesh Bhatnagar. He is asking DCB Bank, should I remain invested?
Yeah, what we can see, Neha, some kind of buying interest is that's getting created with the DCB Bank, and some days we can see some sudden spots in this company, which is catching the attention of the investors. It's a decent business model, but what I am look forward for DCB Bank is the current quarter earnings. So the earnings are crucial for this DCB Bank. After the earnings, we can take the investor can take any strong investment decision whether to hold this company or to book some profits in the medium to short term.
All right. Okay, so Gaurav is asking another follow-up question on sugar stocks. So he's asking about long-term view on sugar stocks in general.
The long term view on sugar stock is much related to the current the sugar export policy, and also the blending of ethanol blending is concerned. These are the key, you can say, the government restriction on export policy, because normally in a election year governments want to control, the policymakers want to control the sugar prices also, because sugar comes under essential commodities act. Okay,
Yeah.
so whenever any company, any commodity that comes under essential commodities, the price always get controlled over a period of time. So right now government want to have a tag on uh, the blending of ethanol blending also. So these are the overhangs for the sugar companies. Probably what I will do is, okay, if I am yeah, if I'm a high risk appetite investor, have some position. Otherwise, the low risk appetite investors, better to avoid majority of the sugar stocks in a medium to short term perspective.
All right. One last query I'm picking is from Madhumani. He's asking, hello, your views on PSU stocks for next 10 years from current levels?
He's asking for next 10 years. Very difficult question to answer. Okay, but there is a sudden change here. Neha, last the year FY23 is concerned, the best performing sectors in the entire market space. One is the first is reality stocks have performed very well in the year 23, and the second sectors, the set of stocks performed very well are public sector undertakings. It can be the whole list. It can be banking. It can be the various public sector undertakings are concerned. So what we can see is definitely there is a change of mood of the market towards the public sector undertakings are concerned. They are increasing their efficiency. So it should be more stock specific rather than broad basing the theme as PSU stocks as a 10 years, because given the kind of disruption that's taking place in the market at this point of time, one need to have a regular review of their portfolio, and it should be stock specific. See, the stocks have been there quite every PSU undertaking have a listing history of more than 20 years or more than 10 years, and the stock have been have a incorporation history of business history of you can say more than 50 years. So the stocks are there, okay, and the stocks will be there after 10 years also. There is no problem, but the optimal level of making profits is the crucial thing for these stocks on a longer term basis. So it should be more stock specific rather than sector
Sector
specific.
specific. Yeah, and also sometimes the sector is not working, but certain stocks are working, and it's vice
Absolutely.
versa. Sometimes few stocks are working, and the whole sector in general is not working. So I think your approach would fit into that because since we're taking a 10-year horizon, which is a very long time horizon, I think being stock specific would be a better option for the person who asked this question.
Perfect, Neha.
Yeah. So we are done with the queries from the audience, and with that, we have reached the end of our segment as well. Thank you so much, Mr. Kranti, for joining us today on ET Markets live stream.
Thank you, Neha. Thanks for inviting me on your show. Thank you.
Thank you. Thank you, everyone.